What's up, Banter fam? It's your host, Miles. Good morning. Good morning. I have my cup of coffee here. I'm just looking at Bitcoin breaking out right now. It's a nice sight to see after a little bit of a bull trap yesterday. Shout out to everyone in the chat. Chantel, Anthony, Lax, Joey, Elizabeth. Thank you guys for being here early. Hustle as well. I know you're watching. Joey, shout out to all of you guys. Thanks for joining. We are seeing a little bit of price action right now in the market. And I want to run through a few things today. It's going to be a pretty big show. So the first thing I want to go through is the charts, what I'm seeing in terms of Bitcoin, where I'm seeing the macro, and then also where I'm seeing the micro in terms of getting some long or short setups. So where I see the market going over the next couple of days. We are now getting a much clearer trend in the market after what happened yesterday with the bull trap. Afterwards, I'm going to be running through some of my favorite lower cap altcoin picks, some slightly more degen picks today, picks that I think can 50x, can 100x over the next year or so, over the next few years, whenever the next cycle is, and have a look at some projects which I think are being, underrated in the market in terms of price, more degen plays, but then also giving you guys actually a strategy to accumulate. Obviously, right now the market is shaky, and this isn't a market I'd recommend aping into super small caps, but it is a market where you need to be building your watch list and need to be keeping your eye on some projects which are being underrated, because we know how quickly things can turn. As soon as the Fed pivots, some of these altcoins, it already could be too late for a lot of them. So having them on your watch list and eyeing them off is very, very important. So when the time to pull the trigger is right, and I'll go through my logic today, whether I think now is that time, you're well positioned to actually take advantage. So going to be a massive show. Shout out to everyone. Make sure you smash the like button for being here. And yeah, let's get straight into the show. So the first thing I want to do is I want to start off with my words of wisdom. It's what I've been starting off every show with these days. And yesterday I said on my Twitter, it's a lot harder to find motivation during a bear market. I know a lot of people start to lose interest. The market becomes boring. We move sideways. But my number one tip for this, and something that's been so important for me personally, is not operating in isolation. So staying motivated by finding a group of friends, colleagues, partners that are actually interested in the crypto market. I think the problem with a lot of people, and the mistake a lot of people make, is that they try and operate in isolation. They trade by themselves, they watch videos by themselves, and although this is fine, there's nothing wrong with that. I think that by having a support group, it becomes a lot easier in this market, becomes a lot easier to kind of weather the storm. I know, when I first joined Banter, being with the crew here, the research team, and just the community, the Banter community, including you guys, it's been much, much more enjoyable to actually learn about crypto, discuss it with friends. So that's my number one tip. And, shout out to you guys for being here right now, hanging out with me. That's, the first step. Obviously, we're here to build together and to work together. And I've been doing Q&As at the end of the show to actually answer your questions and interact with you guys, because I think that's what, we've been missing for quite a while. At least my show's been missing. It's that community interaction. And, I really want to help you guys and help guide you through this process of this bear market as well, because I know it can be difficult on your own. So at the end, I'll be answering some questions. But definitely doing it with others. And, we are a huge community here at Banter. That's what makes the channel so special, in my opinion. It makes the job so much easier. And, there's many ways you can do this. I outlined them on my Twitter, but I think that's just an important thing to note to kind of kick off the video today. But now let's go into some charts and have a look at what's happening in the market. So firstly, I'm going to start with a more macro chart. So I'm kind of dividing my charts up into three segments. I'm dividing it up into the 4-hourly, or the daily, the hourly, and then also the 30-minute, 15-minute chart for scalp. So I wanted to start with the 4-hourly chart, because this is where, I find things get a little bit interesting. We know the 4-hourly, the moves take multiple days, sometimes weeks to develop, but we have seen some massive developments over the last 2 days worth of 4-hourly candles. So what happened yesterday, basically, and if we just zoom in so you guys can see this a little bit better, we did get a little bit of a bull trap. So what happened was, we pumped and then we came down to this previous level. But then what happened was yesterday, if we go onto the hourly chart, we actually recovered most of our gains yesterday. So I know a lot of you were watching Sheldon's show, and Sheldon wanted to long this market. So we took a lot of longs around the 19.4 region. Unfortunately, a lot of those longs did get stopped out. But if you had re-entered your longs, you would have gotten exposure to this massive pump here. So what happened was the logic in terms of the market having a little bit of a recovery, as we saw, it ended up having a V-shaped recovery. That logic was spot on. Unfortunately for Sheldon, the stops just got us a little bit before the logic had time to play out. But I think that, is an example of why you should practice good risk management, because if you had your stops tight and you were using okay leverage, you would have survived that quite well, and then probably came out ahead if you had the audacity to redeploy. I'm not sure if you did redeploy, but that's kind of what happened overnight. We got that huge, that huge V-shaped recovery. So the logic was right there, but will this logic continue to play out? Is this now fuel for the next leg up, or is this simply just another fake out in the market? Well, we got to go to the 4 hourly to answer this question. Now, what we've been in is in this declining wedge, this channel. So we can see we have the lower high, and the lower high. So right now there is one key level that I've got my eye on, and it's this trend line at the 20,900 mark. Now, breaking this level would be big news. Now, we know we are approaching the 100 MA right now, and we did actually bounce off that MA. We can see that that is another point of resistance. This and the trend line that I've drawn in here are going to have confluence over the next few hours, over the next day or so. Now, if we can break this level here, this could potentially set up long. So what's important to note is that, yes, the macro trend, if we zoom out, yes, it is bearish. But if we zoom in a little bit and try and get more clarity, over what's happening in the shorter term, we can see that we are printing a slightly bullish pattern. So we can see this lower trend line is actually indicating higher lows, that we are in a slight upwards trend from these lows that we set here. We can see higher low, and we did break above the 50 MA, and we're also breaking above the 20,100, which has been previous support and resistance. We actually touched off this line multiple times over the last couple of days. We can see, we actually struggled to break above it a few days ago. We had 1, 2, 3, 4, 5, 6 touches on the 4 hourly. Then we went down and we tested this lower trend at the 18.7, and then we have pushed back up, and we've actually now flipped resistance into support, and we can see at the 2100, this is now showing some support. But this next level of resistance is at the 20,500 to 20,700 region with this MA and also this line here. But what can actually happen from here if we, zoom out a little bit? Well, this is a bullish continuation. So in the meantime, we are going to get good opportunities to short. Of course, if we get rejected from this line here, if I just get up my tool, if we get rejected, then obviously this could be a good region to open some shorts, because we'll come up, we'll bounce, then we'll probably come down and touch this horizontal, bounce again, and then potentially come down below the trend. So this is one potential short setup if you're interested in shorting this market. Obviously, you look for that major touch point on that trend line. Now, the other scenario that can happen is we can get the breakout. Now, what would happen with the breakout is we would continue to push above. We'd have to break above this MA, which is the 100 MA, and then we would need to touch on this trend line, and then we'd push towards the 21.5 region. Now, we know how critical the 21.5 region has been over the past few days. We've had multiple points where we've been rejected off it, and since obviously June 15th, we haven't been able to sustain any sort of momentum above this 21,500 region. So that's still the region I'm looking at quite heavily. I think for the shorters, you will get a good opportunity off this trend. You're just going to have to be patient. Maybe over the next 8 to 12 hours, we'll get more clarity on that. And, I'm going to keep you guys updated, maybe on my Twitter and Instagram, whether I'm taking a trade there. But that's the short setup. But obviously, if we can flip that into support, then there is scope for growth in terms of pushing up towards this 23K region. Carl said on the show yesterday, that's the level that he's looking at. If we can have bullish continuation, the 23K region is, a critical region that we can reach. Because if we look at the charts here, we could see that we haven't really made a major push into this zone yet, 21.5 to 21.3. We hovered in there for a few days when we were on the way down, but we haven't really, had any kind of bullish retest of that region. So it makes sense to me that eventually we do come up to the 23. I know the general trend is downwards. We can see it's clear. Accumulation, dump, accumulation, dump. This is actually called a pennant. That's the name of this pattern where you have this pennant formation. So pennant, dump, pennant, dump. It's also possible that, we push up to 21.5 and that still forms a pennant, and then we get another dump. But that's on the macro. In terms of the micro, the long setup is there. And obviously in the short term, we can zoom in a little bit, and we can see that we are approaching, this major resistance here. This trend line is on the 1 hourly chart. So this is potentially a long setup. I personally don't really like trading the 1 hourly that much. At the moment, I'm just finding, there's not much confluence, and the RSI is very high. It's ticking over a little bit. So that's not my ideal long setup. I'd be looking primarily at the shorts on the 4 hourly. That would be my play. I think that's a much stronger trend. All right, so that's my kind of TA analysis on what's happening in Bitcoin right now. We'll keep our eyes on it. At the end of the show, we'll also come back to it and see if there's been any changes. But in the meantime, I think it's time to start talking about altcoins and start talking about some of these alts, which I think could potentially, 50 to 100x over the next cycle, because some of these alts are such low caps. In fact, it's a little bit degen to be doing in these market conditions, but I have logic and a reason for why I'm doing it today. Just remember, if you do want to participate in any trading, I have a ByBit link in the description. There's actually, a few interesting reasons to sign up. Of course, there always is, but the Solana phone, Rand's actually decided to give away 5 Solana phones. We know they're $1,300 each. So if you sign up for a ByBit account, link in the description, you're eligible for the giveaway, which he's doing on the next show, which is roughly in 14 hours. So if you sign up between now and then, and I highly recommend doing it using the link in the description, you will get access and eligibility to that giveaway to win a Solana phone. I think he's going to give away 10, but he decided to do 5 over the next week. So that's pretty cool. And then there's also a $4,200 bonus. Still a pretty crazy bonus, to be honest. I haven't seen bonuses that high across other exchanges. And you can also have your account 10x on the show. So 3 reasons to sign up using the link in the description for a ByBit account if you do want to trade. And yeah, that's that. Link in the description for ByBit. And let's crack on with the video. So, all right, things are starting to get juicy. So let's just kind of frame my thesis here first before I get into these altcoins. So the way I kind of operate my investing at the moment is I structure my portfolio around some select L1s, which I think have the most potential. So what we'll likely see in the next cycle is multiple L1s, although that was kind of the narrative last cycle with, having multiple L1s, EVM compatible L1s, all kind of accruing TVL. What I think we're going to see in the next cycle is real ecosystems starting to build out, and ecosystems starting to develop around principal L0s and principal L1s, which didn't really have time to do so in the last cycle. So we saw a lot of EVM compatible chains, obviously Phantom, Solana not EVM compatible, but that was another one that performed well. BNB, the primary EVM compatible chain, which, accrued a lot of TVL last cycle. Those were the projects that, were really in the limelight and did the most returns. If you look at the percentage returns, I think Phantom, BNB, and Solana were top 10 in terms of returns. I know Phantom was for quite some time. But this next cycle, although I'm not pivoting away from that model because it still has validity, I am looking at ecosystems. And the ecosystems I'm looking at are the ones that didn't necessarily have a chance to run last cycle, but have been building in the background and have massive development incentives and have a genuine shot at developing next cycle. And these are the ecosystems that I'm targeting as being ones that could potentially run next cycle. So obviously these revolve around safer coins, the safer L1s, the safer L0s, which I'll reveal to you in a second. But the thing is, all these ecosystems rely on key pieces of infrastructure that underpin them. They rely on their DEXs, they rely on their AMMs, they rely on bridges, and they rely on a lot of infrastructure which actually, underpins the usability and facilitates transactions on that network, because networks don't operate in isolation. You're not going to get an L1 just pumping for L1's sake. It needs a strong ecosystem underneath it, and it needs genuine fundamentals to underpin that network. So in today's video, I'll be giving you my thesis for some projects that I think can actually underpin these major L1s. And I'll be running through, my 4 layer 1, layer 0 bets, and then also one altcoin underneath each of them, which is a very, very low market cap, which has potential to do numbers. Now, just a disclaimer before I get into this list. Some of these altcoins, they are extremely degen. I think one of them has like a $4 million market cap. One of them has a 50 million. One of them has a 20 million. One of them has a 30 million, very, very low in the scheme of things, considering most L1s are, around the billion market cap range. So just to note, a lot of these are very, very degen, but I have a DCA plan. And, I have a strategy for accumulating these altcoins, and I'll kind of go into that thesis as we go along here. But I want to start revealing the first one and then going through my list and kind of showing you why I believe some of these projects will be good investments. Some of them I don't even own. I'm a big proponent of just giving you the information as I come across it, as news develops. Some of these alts had massive news over the last day or so. Very, very big news that I'll be announcing on the show today. In fact, one of them made an announcement literally an hour ago. I don't own any. I just saw the news. I think it's big news, and I wanted to come on and show you guys before anyone else. So unlike other YouTubers, I'm not pumping my bags. I don't have a vested interest. I genuinely am just trying to give you guys, the research as I am doing it. Now, the first one is DOT. And this video won't be focusing on the projects that I think the L1s that I think will succeed, although that's inherent when you're talking about ecosystems. The main primary focus will be on these altcoins today, because I've talked about DOT a lot, and you guys don't need my thesis on DOT. Maybe you do in the future, but I'll just give you quick rundowns of the L1s, and then we'll dive into their ecosystems because that's a lot more interesting, from a viewership perspective. So DOT is, one altcoin that didn't really get a chance to run last cycle. I think the tech was a little bit too early in terms of its development. The wallet wasn't very usable at the time when things were pumping. There was no real Axelar bridge. There was no EVM compatibility. It was just a really clunky and difficult network to use. So that's one reason why it didn't really run to its full potential. But I am eyeing DOT as being one of the top performers next cycle. I truly, truly believe this. It will be one of my biggest bets because it has the most development, the most active developers behind Ethereum. And it also is the most commonly held asset by crypto VCs. I think it comes ahead of Near, ahead of Rose, even ahead of Terra when Terra was absolutely massive last year. DOT was always the number one held asset for the last 4 quarters by crypto VCs, according to Masari. So when we're betting on DOT, you'll see I have GLMR written here. The risky play and the degen play off the back of DOT, in my opinion, the best one is probably Moonbeam. Now, the reason for this is because Moonbeam is that EVM compatible L1 underneath DOT. So we know DOT is a layer 0. So it's this key piece of architecture, and there's parachain auctions which operate on top of DOT. Obviously, to have an auction, you need to stake DOT. That's where DOT gets its value accrual from. But then these other altcoins underneath DOT, they're the ones that are actually providing network power. And Moonbeam is one of these. Now, Moonbeam had terrible tokenomics in the beginning. Their unlocks were shocking. And it was, part of the reason why I stayed away even in January, February. It wasn't really one I was buying because these unlocks were shocking. Like the amount that was going to VCs in the beginning, it was very, very steep, and it coincided with the Fed pivot, which obviously resulted, in lower prices across many altcoins, Bitcoin, etc. But what we're seeing now is the price starting to level out. And I think it's a much more opportunistic time to start talking about Moonbeam, because Moonbeam is one of those projects that will be key, in my opinion, to DOT's success. Although DOT has other parachains, you've got Asta, Akala, you've got Moonriver on Kusama, you've got many other great parachains in the DOT ecosystem. I think Moonbeam is going to be one of those, fundamental pieces of framework that I think can operate really well under DOT. And I actually went to the conference in permissionless Blockworks in Palm Beach last month, and I had a chat to the Moonbeam team, for quite a while, and I was pretty impressed. I was pretty impressed with what they're working on. They have a very clear vision. They have very clear development incentives, and there's been a couple of updates from the Moonbeam front over the last day or so. So the first thing is, recently they just launched a campaign. So just a couple of days ago, they launched a $15 million DeFi campaign. Now you'll see a lot of these L1s, they do $850 million incentive programs. Moonbeam did a 15 million GLMR program, which for an L1, for a smaller L1 during a bear market, it's actually quite big. Now, for a while, it was very hard to bridge and move your funds across and use Moonbeam, but now they have the Axelar bridge, which is very, very perfect because that, allows cross-chain deployment, and it allows much, much easier bridging, across the Moonbeam ecosystem. It's EVM compatible, right? DOT isn't EVM compatible. It operates on its own architecture, whereas Moonbeam is EVM compatible, and it's got Solidity-based smart contracts, ecosystem tools. It's on MetaMask, which makes it a lot easier, and obviously operates, a substrate parachain slot on Polkadot as well. Now, the best part about Moonbeam is it has the XC20 standard, which is a substrate-based asset, meaning that ERC20 tokens from the Ethereum network can be bridged across to Moonbeam and utilized. So one of the reasons I like them, and part of the reason why Moonbeam is one on the list in terms of ecosystem tokens. I'm starting higher and I'm going to get more degen with valuations. Moonbeam's around a $250 million market cap. Just before we get into the other altcoins, just the important thing to note is that this, it isn't really the time right now to be aping into these altcoins. And I'm not making this video saying buy these altcoins today. That's not the premise of this video. The premise of this video is to have these altcoins on your watch list. Now, you can start accumulating some of them. You can start deploying, let's say 5 to 10% of your DCAs into these riskier alts. And I would start with the higher cap ones like Moonbeam before you get into any of these degen ones. For example, if you're deploying, let's say $1,000 a month into DOT, then that's part of your DCA plan. If you're putting $1,000 a month into DOT, I personally don't see anything wrong with allocating 5 to 10% of that DOT stack. So in this case, $50 to $100 to, the riskier ecosystem projects, because, you can't really pick the bottom. And although they can go down another 50 to 90%, potentially maybe even more, at the end of the day, you can't pick the bottom. So I definitely see the merit in allocating 5 to 10%. But, buying and hodling and that kind of accumulation approach, it's not a one and done thing. It really depends on your investment goals. So, if you are willing to DCA, you got to be willing to go underwater in the meantime. Now, I am DCAing a tiny bit into these ecosystems. I'm DCAing primarily into the main ones, and I'm doing much, much heavier DCAs into Bitcoin ETH. So I just want to be transparent. I'm not aping yet. I've got a lot of cash on the side, and this isn't something for today's video to ape into, but you need to have them on your watch list and start getting them in your trading view and start charting them and start paying attention, because by the time the market turns, you don't want to be in a situation where you've kind of missed out and you're scrambling to get your watch list together. I'd much prefer you guys have your watch list set now, so you're not in that position come, however, whenever it comes. Could be in a couple of months, could be in a year, but just having it in your watch list will be very, very important, which is, the purpose of why I'm making today's video. The next altcoin that I want to reveal to you guys is, and I've even forgotten what order I've put them in, so this is exciting for me as well. Make sure you smash the like button, by the way. If you guys want these altcoin picks, make sure you smash the like button. Show the algorithm some love. I haven't been streaming that consistently recently, so show me some love. Smash the like button for these picks, guys. Solana. So, look, Solana is an interesting bet. And it's interesting for a couple of reasons. The Solana phone, is one very interesting way. I like the pivot between them trying to accrue these mobile users. Obviously, DeFi primarily operates on, in terms of Web3, it primarily operates on desktop. And I think the problem is many, many users, they only want to use their phones, and phones are still, the primary devices that people are using to obviously interact with friends, but also even trade. Most people trade on their phones. Most people go on CoinGecko on their phones. So I don't see any reason why these L1s shouldn't be pursuing, mobile development. And the Solana phone is one of the ways that Solana's doing this. And although, it may end up being a flop and it only has 2,500 orders, I at least like the pivot here. And I like the fact that they're trying to explore new avenues to growth. And that's why, in general, I'm bullish on the Solana phone as a narrative. No, I'm not saying it's going to make a massive difference to the SOL price, but as a narrative and a pivot from a development standpoint, I do like it. Remember, if you do want to, win a Solana phone, sign up for a link in the description to a ByBit account. We're giving away 5 Solana phones. Rand's going to start giving them away on the main show. The only way to get a Solana phone is to have a ByBit account. So link in the description. Make sure you sign up for a ByBit account. There's also a $4,200 bonus. Win-win for both of us. We keep the channel ticking along. You get free money, basically. So that's a win-win if I've ever heard one. All right, so Solana has Raydium underneath it. And I said in today's show, I'll be focusing mostly on these altcoins and not so much on the L1s. I'm going to do videos in the future more talking about the L1s because there's a lot to talk about across DOT, Solana, AVAX, etc. But today I just want to talk about these alts because, let's have a bit of fun. Let's start building our watch lists because most YouTubers at the moment are coming on and they're saying Bitcoin, Ethereum. And personally, I'm a little bit of a degen and I'm getting bored of just hearing Bitcoin. I know all the eyes are on Bitcoin at the moment. It's very, very important as we see, we're bouncing off this horizontal here. It's very, very important, of course, because that's dictating the entire market. But I see so much merit in building out your watch list at the moment. And Raydium is one from a Solana perspective that I've got on my watch list. $80 million market cap, 380 fully diluted. It's still got some dilution to go, and most of the projects I'm showing you today still have an element of dilution, but it's one I've got on my watch list for good reason, because Raydium is the primary AMM behind the Solana network. So if you're betting on Solana and you think that you like the network Solana's building, you like the community it's growing, you like the growth in transactions, the NFTs, the gaming, and you like that narrative and you own Solana, then owning a Raydium gives you exposure to the DeFi side of things. And we all know that you need AMMs, you need DEXs to actually facilitate swaps. So if Solana accrues users, it's only logical to assume that one of these DEXs pops and one of these AMMs pops, because one, you need liquidity to get into these projects. Two, we're likely going to see a lot of these applications deploy on mobile when Sol does launch its Sol phone. And three, you're getting much better prices from a risk reward perspective, considering most of these projects have been smashed. And if we go down even further, like I'll show you on my macro charts, very possible we hit the 14K region. As you can see, I've got this big blue box here. If we do go down even further, in the long term, I do think it's likely we get a push up before then. But if we do go down, then some of these projects will get smacked even more. And that only spells opportunity if you have them on your watch list, because personally, I don't believe Raydium is going anywhere. So Raydium is one that I've got on my watch list. It is let's have a look. Jupiter's slightly overtaken it from a Solana perspective, but it's still the 17th most traded on DEX, $20 million of volume a day. Compared to Jupiter at 44 million. So it's still the second biggest DEX on Solana. It's also the third most used application on Solana, 23.6K daily active users. We could see GLMR and obviously Magic Eden being, the major NFT trading platform being the biggest one, but Raydium's still a fourth of Magic Eden. So in terms of user numbers, this is actually quite impressive. 23.6 thousand users is actually a lot. Most of these other chains, like I think most Phantom applications at the moment have like 5 to 10,000 users. AVAX even less. Like some of them have like 2,000 users, even some of the bigger DEXs. So Raydium at 23.6K in a bear market is not bad. That's not bad. It's not bad at all. It's one of the reasons why it's on my watch list. One to keep your eye on. All right. The next one, I think it's AVAX. It is AVAX. So AVAX, this is an interesting one. It's not one of my major plays. I'm not allocating crazily heavily towards the AVAX ecosystem yet. I'm actually more focused on DOT and Sol, and one other L1 that I'll show you later on in this video. I'm not as focused on AVAX, but I put it in here because I think this narrative appeals to a lot of people. So the fact that AVAX has its subnets, it's going after this very secure, very long-term approach for scaling. So they knew with subnets that they were going to sacrifice a little bit of the network's value accrual through sacrificing some AVAX burn and transaction volume in the meantime. We've seen the AVAX C chain actually decrease in volume. We've seen a lot of the ecosystem shrink alongside the market. But what they're doing here is they're saying, okay, we're willing to sacrifice some transaction volume now for value accrual later, because if you operate a subnet under the Avalanche architecture, you will need to stake and hold AVAX tokens, which eventually will be the primary driver of AVAX token growth. So if you believe in subnets, and I do believe they're right now, apart from sharding, probably the best scalability solution, although we haven't fully solve the trilemma, the blockchain trilemma of scalability, security, and decentralization. AVAX is relatively centralized. That is one side of the coin it's failing at. But what it is succeeding at is scalability. And these subnets make AVAX arguably the most scalable, if not one of the most scalable L1s on the market. And it's a very secure network from an architecture perspective, because the subnets take some transaction pressure and volume off the primary network. So if you believe in that narrative, and I do believe in it, it's just not one I'm allocating so heavily towards. But then the logical place to invest becomes Trader Joe. I'm still holding a lot of Joe, and this is one I'm accumulating. In fact, I hold more Joe than AVAX. That's not something I'd suggest for the majority of you, but I don't know. I just own more Joe than AVAX for some reason, probably because I've been farming it. But Trader Joe's one that has been smacked, but it's an interesting one because we talk about in the bear markets, invest in projects with runway. You don't want to be investing in projects that are going to fail and go to zero. And many, many projects will. Like, don't be confused here. This is a bear market, meaning many projects that you're used to looking at and many projects that were in the top 50, a lot of them are going to fail. because there won't be enough liquidity to underpin them. There's not enough development. There's not enough public interest to actually keep them afloat. So a lot of them are going to fail. But the thing is, we have to look at projects with runway. And the Trader Joe team did something, whether it's just optics or whether it's factual, that's another thing. But they did something which I really respect. And they came out on Twitter and they said, our treasury is a mixture of Joe, AVAX, and USDC, never been used for high-risk strategies. And we have enough, and this is the important thing to note, we have enough runway to pay our large team of 26 to survive such market conditions. They did a follow-up tweet after this in June, and they said, we have enough runway to survive 12 months, paying the current team of 26 members. So 12 months, that may not be enough for them. If the bear market lasts longer, firstly, that would be a monumental bear market because that at that point that would take us to almost 2 years of bear market. But if it did last another year, which would take us to about here, like a slow bleed out to November, then maybe they start facing some issues. But they did say they're employing a team of 26. So if they have enough finances and runway to survive 12 months with 26 members, my logical assumption here, and the thing with runway is you got to make logical assumptions. There's no black and white. Unless you're on the team, you don't really know. But based on what they said, if they did cut this team member, let's say in half to 13, that would arguably give them another 12 months runway, which would push it out to 24 months. Once again, all speculation. And if it did push it out to 24 months, then that would end up leading to real runway for Joe, which means, it wouldn't go anywhere. And that's a major, major thing that I look at because a lot of these ecosystem projects, they will fail. Whereas Joe, having this assurance, it makes me a little more comfortable. Now, it is a low cap. And the thing to remember is these small caps, they can go so low. They can just keep on crashing and keep on crashing. Joe incentivized with emissions. A lot of emissions dried up. We can see that the circulating supply is now very close to the total supply. From a bias perspective, this is positive as there's less emissions. From a staker's perspective, it's negative because there's less emissions, right? So now it relies on genuine revenue growth in order to generate the same amount of fees to pay off its users, which is why the yields have dropped, which is why there's less TVL, which is why the price is down. So it has a direct correlation. But in terms of something that can survive the bear market, come out the other side ahead, and has exposure to a major ecosystem, I don't see Ava Labs letting Joe fail. And if AVAX succeeds, I think Joe succeeds. So if you're betting on AVAX, you're likely betting on Joe. Obviously, to a much lesser extent, I must reiterate, 5 to 10% of your AVAX stack would be the ecosystem. It's small by the scheme of things, but the thing is with these projects is that they can 10x. This can genuinely 50 to 100x. Like, that would not surprise me. Now, I'm not saying it will, but I'm just saying it can. And the fact it can means you can afford to put less of a percentage portfolio weighting and achieve the same outcome as you would by putting more capital. So the thing with L1s is you need to put a lot more capital in to get the same returns. So AVAX made 10x next bull run. It made 20x, which is still amazing returns. Like, don't get me wrong, in traditional markets, the 10x is like unbelievable, and we shouldn't be greedy in terms of 10x's because that's nuts. But the thing is, the ecosystem projects, they'll likely do 50, 25, 50 plus X's. The thing is with them, though, is that you have much more downside risk in the meantime. So yes, you theoretically have to outlay less capital for the same real outcome. But at the same time, if you're outlaying the same amount of capital, you're exposing yourself to much more risk. So that's why I like to keep them, a lot less of a market cap. You can't, Joby said you can't operate off price alone. That's how you lose money. 100%. I always look at market caps and I always look at FDVs. I don't care about price. If this was 1 cent or $10, I don't care. All I'm looking at is the circulating supply, the total supply, its emission schedule, its market cap relative to its APRs. That is 100% what I'm looking at. And they just launched a new liquidity book, something to keep your eye on. Next ecosystem, we got two more ecosystems. Remember, guys, smash the like button if you're enjoying this video and enjoying these altcoins. Smash the like button. Show some love on the channel. We're working hard every day to research and find these projects and vet these projects for you guys. To ensure next run we come out well ahead, and we also have the trading on the side, which is keeping the dollars ticking over in the meantime. So I think it's a good combination right now. Okay, the one I'm probably most excited about. Now, I'm most excited about Nia. Actually, I'm very excited about DOT as well. I don't know if I can say that. I'm very excited about DOT as well. But if there's one on L1 I'm excited about apart from DOT, it's probably Nia. For some reason, I just really, really like this ecosystem, probably because I've been playing around on it a lot over the last few days, getting involved with the DeFi on Nia. But Nia is one that I've just got my eye on, and I do like it. I think there's a lot of room to go in terms of usability. Like, I've been using the Nia wallet, and although it's fun to use just because it's novel, it's a new chain. Whenever you use a new chain, it's kind of exciting, at least for a DeFi nerd like myself. It still have a ways to go in terms of EVM compatibility. Right now, it has something called the Rainbow Bridge that's allowing you to bridge funds from Ethereum to Nia protocol. It does need a little more compatibility, though. I'd love to be able to bridge directly from Phantom to Nia, BNB to Nia, Solana to Nia would be amazing, even though it's operating, on a different consensus. That would be so, so cool. The problem is right now you have to bridge to ETH first, basically before any of these transactions can take place. It's a little bit clunky for that reason, but with ETH gas fees so low, I think it's much less of an issue than it used to be. So Nia Protocol is one I've got my bets on. I'll talk about it a lot in future videos. The quick summary is $850 million in incentives, plus basically the biggest list of VC backers we've seen in terms of an L1 in a long time. It is one that has some serious players underpinning it, and it's why I won't be betting against it. And we can see that the TVL on Nia in general, despite a very, very bearish market, it actually has held up okay. Now, obviously, 500 million to 296. It's not the greatest return, but considering Phantom's down 90%, Solana's down 80%, AVAX is down close to 90%, Nia only down 60%, is better. And as part of the fact that it had its run a bit later, it didn't really have functionality when these other L1s were popping. So Nia's on my list for that reason. And then if Nia's on your list, then you got to find the best project on Nia. And in my opinion, the best project on Nia is Ref Finance. Now, there's some very, very positives with Ref, and there's some very, very negatives with Ref. The positive is that it's a low market cap. Now, you can also view this as a negative. It's a very, very, very low market cap. So this is rank 1,177. I don't think you'll get a lower cap than this. That, in my opinion, is a valid investment right now. I don't think you'll find one, because this is extremely degen, and this can 100x. It easily can. If Nia becomes, the word easily kind of is a little bit misleading. It easily can if Nia protocol becomes a top 5 L1. That's the statement. Because if Nia succeeds, the main DEX will likely succeed. And Ref is very, very good in terms of what it actually offers as an ecosystem. Now, at a 4 million market cap, you have to factor in, and this is the negative, that it has a circulating supply of 14.8 and a total supply of 100. So it still has a 6 to 7x dilution yet to come. Meaning there's 6x the amount of tokens that are on the market right now that are yet to be emitted. Now, if we look at the tokenomics, I'll show you this new roadmap in a second. We know that vesting is not all at once, so it is going to happen over some time. The majority is happening over the next year, so we will see continued sell pressure. It's why I'm not really aping in right now, because I think this will be one that's a great accumulation in like 6 months. But I'm giving it to you guys now for your watch lists. It's like a 6-month thing, because there are emissions coming in the next 6 months. It's going to dry up a little bit, but emissions are positive in one respect, because you can stake on Ref Finance. We know there's many good pools. I'll show you right now. And you can actually earn these Ref tokens without having to have exposure to the Ref token directly. I showed you yesterday a USN staking strategy. That's a stablecoin strategy to earn Ref. Obviously, you can sell it back for stables if you want. That's paying 17%. You've also got these Nia protocol. You've got, I think it's still very valid. Let me try and find it. It's staked Nia. It's a staked Nia strategy. Look at this, 20% on staked Nia, wrapped Nia. That's very, very good. So if you're accumulating Nia, and yes, that's one I'm buying a little bit of now. If you're accumulating Nia, then you can earn 20% on Ref Finance and get paid tokens in Ref as well. So that's one way you can accumulate Ref on Ref Finance without having to buy, because as I said, the thing with buying it right now is that this dilution is still a little too heavy for my liking. But this will be a great buy in my opinion, because at a 4 million market cap, fully diluted of 30 million, that is quite low relative to how big I think the Nia protocol ecosystem can be. Nia very well may fail. Not all of these L1s will succeed. In fact, out of these 4, 1 or 2 are likely going to fail. But the thesis here and the narrative behind it is All you need is one to gain mass adoption like Ethereum did. All you need is one to develop an ecosystem which is highly institutionalized, highly backed from a DeFi perspective, in order to see major gains. And obviously the L1s, they'll accrue a lot of the value, but then if you can nail one of these ecosystem projects, they will pump possibly and likely even harder than the L1s themselves. And that's why Ref is on my list. Now, I said there was a big announcement. That announcement was actually like literally an hour ago from Ref Finance, and they just launched, just in their VE tokenomics on testnet, vote escrow tokenomics, meaning the more tokens you lock and stake, the more governance power you accrue, the more voting power you have over the protocol. The people that stake their VE tokens and lock them, they will be able to have control over which pools they boost, and we'll see select pools in Ref Finance being boosted. I do think this is a positive. Okay, in this market, VE tokenomics aren't as exciting as they were in the bull. I admit that. But at the same time, this does offer another element to Ref Finance being a token people actually want to hold. Right now, the incentive for holding Ref, it's kind of high because you get exposure to NIA, but it's not massive. This VE tokenomics announcement means if you stake and lock them, which will obviously in turn reduce the circulating supply, this will in turn give you voting power. And we can see how popular these tokenomics were on Curve Convex. We saw it on Beats, which is why Beats and Beethoven on Phantom exploded last year. We saw it on Liquid Driver. We've seen it with Convex. We've seen this model be successful. It has limitations. It does rely on a lot of liquidity underpinning price growth. But at the same time, this does give us now an incentive to actually hold and stake the token. And it's a big announcement, and I highly recommend checking it out. If you're a DeFi nerd like myself, if you're very, very interested in DeFi and these projects, then I highly recommend checking out Ref Tokenomics 2.0. It's under the Ref Finance medium. It was just posted, so this is hot off the press for you guys. Hot off the press. And read through it, have a look at how this will impact the ecosystem. It's on testnet, so it won't be on mainnet for a couple months, but once it's deployed, that will be very exciting. The price did move 2.9%, although we are seeing a slight Bitcoin rally now, so that's probably one of the reasons why it's up. So the market didn't react too strongly, but that's a good thing, right? If it pumped, then you'd be missing out on an opportunity long term. So let's just add this to the list of ones that I'm accumulating. And I think off the back of NIA Protocol's success, NIA can be very successful. So those are the 4 altcoins that I wanted to show you guys. 4 riskier altcoins, 4 altcoins of varying market caps. Moonbeam's 250 million, Raydium's 80. Then we work down the list, Joe's 70, and then Ref Finance is 4 million. Some of them have dilution, which pushes their FDVs slightly higher. But I wanted to go through the list today, show you just a spectrum of projects underneath their respective L1s that can perform well. Now, remember, you can DCA into them now. You can allocate a small percentage. I'm saying 5 to 10% of your L1 stack. So just to reiterate, if you have $1,000 worth of DOT, then you'd only have $100 worth of Moonbeam in terms of DCAs. The reason for that is because this is a very, very risky market right now. Prices can come down another 80 to 90%. So if you are DCAing, your strategy is set, and you are willing to accept that you'll go underwater in the meantime. I personally am underwater on some of my DCAs from the last month. I'm not worrying because that is my personal strategy. Now, if you're very cash poor and you don't have much cash and you need buying power and you're overexposed to the market, then aping in and chasing losses is not the play. The play is actually then to accrue cash and then deploy over a period of months when the macro climate eases a little bit and when it looks more likely that the bottom is in. If you're very, very overexposed to crypto, then you may want to consider, I would never recommend timing the bottom, but you may want to consider shortening your accumulation window. Whereas someone with a little more cash, and I'll be honest, like I put myself into that category. I've got runway for probably 2 years here. So I really don't have a problem with DCA now because I've got that cash flow, right? And I've got that those savings, those stablecoin balances to accrue over many months. And that's my strategy. But I will say, even personally, I'm holding off my big buys for these lower zones. And as I showed you earlier in the video, 12 to 14 would be a place where I ape. And even 18 to 19, this green box here, I'll zoom in a little bit. This green box is a nice little DCA top-up zone. Until then, we may very well see a push-up and bullish continuation, Or, as I showed you earlier in the video, this short could end up being one that plays out if we get rejected off this trend here. One to definitely keep your eye on, and one I'll be keeping you guys updated with over the next couple days. So yeah, make sure you have your plan. Fail to plan to fail. Make sure you write down your plan, write down your DCA plan, work out how much cash flow you have available, and then come up with a structured, formulated plan to accumulate that has risk management in mind. The last thing I want people to do is just ape in blindly and just DCA, and then in a month complain because prices are lower. What I want to see from you guys is very strict plans that we stick to over 12 months. And I think that's probably something a lot of us were lacking last bull run. Strict plans in terms of accumulation and selling, because the FOMO tends to get the better of you in a bull run. But don't let that happen in the bear market, because FOMO in a bull market is a killer, but in a bear market, the killer becomes the opposite. It becomes capitulation. So you're swapping FOMO, which is like wanting to ape in at the top, for capitulation, which is wanting to sell at the bottom. And it's the exact same thing, guys, just the direct opposite. So just as you would have had a plan for taking profits, have a plan for not capitulating, have a risk management plan for accumulating during the bear market. And that would be, my major advice to you guys right now. Yeah. So thank you guys for watching the video. Make sure to smash the like button if you enjoyed these picks. I will see you likely tomorrow, if not the day after. And yeah, let's keep our eyes on the charts right now, because it's going to be a very interesting couple days with CPI in a couple days. Very, very interesting times on the market indeed. Thank you guys for watching. I'll see you in the next video.